Maverick. Noun, unusual person. A visionary, leader, go-getter, an independent thinker. They see the vision for their life and pull that future towards them with an unyielding belief that things can and must be better. They achieve what most won't. Innovative, influential, daring, and direct, with a remarkably high tolerance for taking calculated risk. A foe to the status quo. This is Passive Real Estate Investing with Mavericks. Your host, Neil Timmins, has been involved with over $300 million in real estate transactions. He's a published author, commercial property investor, and real estate syndicator. This show is for those who want to learn how to earn passive income through real estate investing. Now, here's your host, Neil Timmins.
On this episode of Passive Real Estate Investing with Mavericks, I sit down with Scott Jelinek to uncover the details and secrets of the slow flip.
Hey Mavericks, this is Ava Baukamp, and this episode of Passive Real Estate Investing with Mavericks is brought to you by Legacy Impact Investors. We are an industrial investment firm located in cashflow country, the Midwest. We strive to shield off risk and beat inflation, all while producing predictable cash flow. We curate real estate investment opportunities for busy professionals and other real estate investors seeking passive income. To learn more about what we do and connect with me, go to www.legacyimpactinvestors.com.
Welcome to Passive Real Estate Investing with Mavericks, where we provide actionable steps for you to grow your passive income and become job optional. During this episode, you're going to get to discover the slow flip. For those of you who are new, I'm your host, Neil Timmins. I love passive income from real estate. Before I introduce you to today's Maverick, I want to make a request that at any point, if you like what you're hearing, well, give us a thumbs up and be certain to subscribe to the show. Never miss a valuable episode. If you love what you hear, give us a written review. Plus, be certain to take a look at the description of this episode. We packed it with thousands of dollars in free resources. Now, today, we've got the privilege to learn from a person who's been in real estate for 30 plus years. Prior to his career in real estate, he was a lawn mower. But it all changed when he stumbled into his first rental property. I would describe today's Maverick as somebody who's passionate about living debt-free and living life in his terms. Today's Maverick, Scott Jelinek. Scott, how are you?
I am fantastic. Thanks for having me on, Neil.
I'm excited you're here. Hey, say, for the audience's sake, who are you? Where are you from? What do you do?
So I'm originally from Long Island. I live in Virginia Beach now, been here for 30 years. And through trial and error, through getting boom and bust and getting crushed and smacked down like most of the world did back in 2007, 2008, I've revamped what I do to a very safe, secure, passive income strategy now, which we call the slow flip, which the short version, and I know I was explaining this already, is we buy properties on short-term financing, but we sell them with long-term financing. And so we operate as a bank. And I know a lot of people in rentals, and we spoke about this, think rentals are passive, and they are to a point, especially through management. But if you manage your own, there's still a lot of work with them. We do it completely operating like a bank where all we do is process payments.
Process payments. You've become the bank in what you've created. Fair to say?
Absolutely, 100%. That's exactly what we do.
Let's dive into that. So take me out of the hood. Just tell me a deal. Walk me through one deal.
So before I say these numbers, I'm just going to let you know that some people, as soon as they hear it, they say, that's not possible. You can't get houses at this price. And I always say, don't believe me, just go to the internet, type in the country under this price, and you will see they exist. So we buy houses typically for under $30,000. And those are the houses that nobody wants, right? Everybody's like, landlords don't want them because they're the worst rentals, the worst tenants, the worst turnover, the worst repairs. Rehabbers don't want them because, again, the same thing. There's not a lot of retail sales there. So we get in the middle where we buy them, and we'll buy them on 5-year loans. So there's no money involved. We don't need any money. We buy a 5-year private lender, 12% interest we pay. So our payment comes to $667.33 for 60 months. We sell them immediately, typically for anywhere from $59,000 to $89,000 with owner financing. Yep. Typically $3,000 down, $875 a month, and we do the full term. We don't do any of that balloon or you have 3 years to exercise your option. We do a full term owner finance. So what happens is we don't renovate them, we don't do anything. We're basically selling the financing and the house comes with it. because there's a gap in the marketplace, which is those low-end housing, the sellers need cash.
Correct.
They need cash to sell, but yet the buyers need financing, and banks won't finance them. They don't finance those low-end houses, so they sit there. And so we kind of get in the middle where we can give the seller the cash and we give the buyer the financing, and then we just collect checks.
You 5 year on your debt. You're borrowing on a 5 year basis, and you're lending out on how long? What term?
On 30 years.
On 30 years, and you're going the distance on this thing.
Correct. There is no prepayment. There is no balloon. They never have to. See, and I know you may disagree with this. A lot of people do that lease option or 3 years or 5 year balloon. I hate that because I feel like the buyer kind of gets screwed because they're making it their home. They're treating it as their home, but now they have a clock ticking. And if they can't qualify at the end of that time, they lose the home. And so I'm very much against that, where I give them the full term to pay it off to a zero balance, the same as I do. Once they're in, all they have to do is make their payment. Their payment never changes. It's their home for the duration, and they can leave it. It's theirs. They can sell it. They can rent it. They can do anything they want with it.
Most don't go full term. Fair to say.
We have a significant portion that go for full term. What? I'll tell you something else. We also sell to a lot of investors, which is crazy because there's a ton of investors, and I refer to this guy as 2005 Scott. It was me back when I started in 94, but I got revamped after the bust. But there's a ton of investors who want to be Section 8 landlords, or they want to do conventional rentals, but they don't have the money or the credit to qualify for bank mortgages. So they love our plan as well. We have people that are making $1,300, $1,400 a month on Section 8. They're paying us $800, so they're happy and they're making good cash flow. But we just operate like the bank. All we do is collect our checks and make our payment, and they do the landlording part of it.
Yep, no, that makes sense. When you sell these out the door, they're sold as is. No renovation on these things. Most
of them I've never even seen. I have 170 of them right now, 5 under contract, and most I've never even seen. We just do video walkthroughs, pictures. I buy them, we sell them. We're just doing the finance, not so much. I'm not in love with houses like I used to be. I'm more in love with the passive cash flow.
Yeah, because you're creating a monster passive cash flow stream. You've got a spread that's, a spread that is probably that of an average rental property in this country on the first 5 years. And then after your debt's paid off, you've got a monster cash flow coming in.
Yeah, there's almost no spread on the first 5 years. And even though it seems like there's a little, the way I teach my people, I say, we keep the down payment. I say, don't spend it until it's free and clear. The monthly spread, which is a little, I say, don't touch anything until it's free and clear, because if we have a vacancy or if you had a non-paying tenant, if you had some issue, I don't want anyone to have to come out of pocket. So this way I'm like, leave that money in the account and then you have no stress. Once it's paid off, then you can have it.
Yeah, no, that's incredible. Do you sell your notes at all?
I do not. And I've recently, a few people have talked to me about it, but the challenge with selling them, and I guess it depends on where you are in your life, right? The challenge with selling them is if I get cash, I now have an obligation to reinvest that cash, because I'm a big firm believer of, and your listeners probably are as well, we never spend our cash. We only spend the money our money makes, right? And so every now and then I have a buyer who will pay us off or do a refi or sell the property, and I'll get 90 grand. Well, I'm like, well, that's great, but now I have to go buy 2 and 3 more houses because I'll never spend that 90. I only use it to buy more houses. So that's why I don't sell the notes, because I'm like, well, once I do, now I have to go buy more houses.
Yeah. So I was thinking about that from a passive investor standpoint. You've worked yourself to a spot where you're passive, but not, there is a spot past you that's ultra passive. That would be that of a note buyer. The idea being, one, you, the listener, to be ultra passive would buy the note, which Scott originates, puts in place, and you literally just collect payments. You don't do any of the front end work.
That would be the next step. That is as passive as you can get. Buying the note and then just collecting the payments. Correct.
Yeah. I like what you've, there's some uniqueness to what you have put together. Tell me, what are the biggest challenges? It's not, and I think you've touched on or alluded to those. People don't pay sometimes.
So people don't pay sometimes. Now, we very rarely do an actual eviction, but we do file a lot. And by that, I mean, if you didn't, the deal. If you didn't pay by the 5th, you get your late notice by the 15th, we file. 99% of the time they pay before an actual court date, but you still have to file to force that, because when you try and be nice, as you know, or you try and be passive, rather than them pay when they're 1 month behind, it'll be 4 and 5 months. And now they can't pay even if they wanted to. It's a lot of money at that point. So that's a challenge. The other challenge that investors have getting into this, and a lot of its mindset is that when I talk about free and clear, and I'm a big free and clear guy, they start thinking, yeah, well, that's fine, but I don't have the money to buy these cash. And I try to explain to them, we use the private money, and everybody has this limiting belief in their head that, well, I don't know anybody, I can raise the money. And I'm like, you can. I've taught so many people to do it. The money's out there, but it's a big stumbling block in people's heads when they're starting, is to think, yeah, but I don't know anybody. I don't know anybody that has money. I'm like, yes, you do. They're not telling you, but the money's out there.
Yeah, no, the money is, you're right about that. The money's out there, and there's a ton of money on the sideline looking for opportunity, but it takes an entrepreneurial spirit to put opportunity together, to bundle it up in such a way that it makes sense for those who want to be passive investors, or whatever level of active one wants to be, that somebody wants to sign up and move forward with them with an opportunity.
Yeah. So, like you said, with the note buyer, that is the next level of passive. Yeah. So I'm not as passive as you would say, as a note buyer, but I don't have any employees. I don't hardly work at all. I still have a little bit of management I have to do basically through my computer or my phone, but managing 170 of them, it's not like property management, because all we do is manage the payment. And, if we have a payment, make the payment and make sure the collections and late notices went out if someone didn't pay. But it's not a heavy workload as it was when I used to do conventional rentals.
Are you in one market or are you in multiple?
So I'm in Hampton Roads, Virginia Beach market. And so I started out here. I started the slow flip model in 2011 when I was dusting myself off and recuperating from the bust. And we bought a lot out here, and that was my primary market. But through our last boom, we're really priced out of buying them in the prices I need them for. We'll pay up to 50 or 60 here in my market because we can still pay them off in 5 years. But it's been harder and harder to find them. So we started venturing out, and now we're in Missouri, Illinois. I have some of my people are in Indiana. Mm-hmm. And I have, I think 48 now that are over in Missouri and the Illinois side of the river, same St. Louis Metro, but both sides of the river. And I love it over there. I'm like, there's so much opportunity there that, that's kind of our main focus right now, is that market over there. And most of our people have been buying in the same market.
Fair to say you probably end up with a waiting list, a list of buyers who just want the next house, want an opportunity.
Yeah. The crazy thing is, so many times people will hear what we do and they'll say, well, who would do that? Why would someone pay $69,000 if it's available for $30,000? And I agree with them, but I always tell them, I said, it's supply and demand. We are giving the financing. And so although they might be 10 available for 30 grand, those ones require you to pay 30 grand cash. There's one available, it's 59, 3 grand down, 875 a month that you can buy. And so the demand for what we offer is outrageous. So you're right. There's always a list. We have 0 vacancies, and we very rarely have a vacancy more than a couple of days because the demand is so high for what we do.
So people don't buy house price; they buy house payment.
Yep.
Well, and that's true of anybody at any price point. It doesn't matter if you're buying $1 million home, and people in my backyard are finding that out real quick when interest rates went from 3 to 7.
Yep.
That payment on $1 million place isn't quite the same. Therefore, there's not quite as many people lining up to buy $1 million house or $2 million or whatever the number happens to be.
Yep. Absolutely.
Tell me what coming through 2008, 9, 10, what'd your world look like then?
So I got crushed. So prior to the bust, I did what everyone taught and still teaches. I did the Burr method. Everybody loves to talk about it, and I hate it, but I hate it now. I loved it then. And if you spoke to me in 2005, I would have convinced you it was the greatest thing in the world, right? Well, it was great until mid 2007, everyone stopped paying. The world started collapsing, and I had 84 properties at the time. I had 84 mortgages. I lost about 55 of those houses to foreclosure, and it turned my world upside down. I went a whole year with making almost no money at all. Like I was paying for my life on credit cards. The world was in turmoil then. Yeah. And so it was transitionary, and then started coming up with the new plan. I got back into wholesaling, which I still wholesale, and coming up with a new plan for holds. And because the price came down so much, these houses were 100, 150 grand. Now they're selling them for 30 grand and 15 grand and 19 grand right in 2009 and 10. Right. So we came up with this plan of how could we pay them off as quick as possible, but still maintain keeping them. And it's the first 5 years weren't easy, mind you, because the first 5 years were like, we're doing all this work, we're not making any money. So I started that in 2011, but in 2016, everything turned around because all of a sudden my first 30 or so got free and clear.
Yep.
Now, all of a sudden, I had the weight of the world off my shoulders and no more fear of a recession, no more fear of downturns, because once they're free and clear, that fear is gone. When we dealt with COVID and the world, like you weren't leaving your house, everybody I know was panicked because how are our tenants? They can't go to work. How are they going to pay their payments? We have mortgages to pay. And I didn't really have that stress because, again, I might have had lost revenue, but I knew I couldn't lose anything because I have so many free and clear. And so I know there's quicker ways to make money when people do leverage and all that stuff, but I'm all about peace of mind, being, free, complete freedom. And so I've kind of evolved into what I do now, which is believing in debt free and just making our monthly checks every month, even though it might not be the biggest check that can come in. It's passive, or a level of passive compared to the note buying, but I like it a lot. Well, there's no right or wrong. It's simply a matter of what's right for you. Right. What are the biggest lessons you've learned coming through, in your nearly 30-year career at this point? Yeah. So one of the biggest lessons, which I guess I feel like everybody's learned, but this is something funny, and I don't know how long you've been doing this, Neil. I talk about it, the bust like it was yesterday. Yeah. And someone just last week pointed out, they said, that was 15 years ago. And one of the guys who was in my group was like, I was in high school. And I'm like, I don't think about that because I feel like it was yesterday. Right. Well, one of the things I learned is that the leverage model that everybody teaches and preaches and still does, it's all great and it's true and it works until it doesn't, right? It basically, in my opinion, it's a house of cards. Now, if the world keeps going the way it's been going since, the bust, we've been on a straight up cycle. Right. So anybody who started at 2008 or later is like, Scott's crazy. No, the world's great. We just keep buying. They keep going up. Right. And they may forever. Who knows? But my reality is I do not count on any of that. I don't believe we own it until it's free and clear. And I know people hate that, but that's me. And so my biggest lesson is that I don't want debt. And as much as it makes sense on a calculator, and it makes sense from your CPA's point of view, they like that deductions, and it makes sense from your lawyer's point of view for asset protection, it doesn't make sense for me to have debt on my properties. I sleep a lot better knowing I own them free and clear. Yeah, no, that's great. Hey, well, you still pay property taxes on those properties, right? Correct. You don't own it even when you do own it. You only get a lease for the government. Yep, absolutely. We're always renting. You're right. Always. We're just renting from the government. Yep. Yeah. You're absolutely right. It's really incredible. Tell me, knowing what you know now, what would you have done differently going back to 94? I wouldn't have participated in the boom. And what I mean by that is I had about 20 properties when we hit 2001. 2001 was the first time I started seeing appreciation because I was buying, and I don't know how long you've been investing. I started in 94, but back then we had non-qualifying assumptions. Do you remember those? Yep. And they ended them in 87 and 89 for VA. Yep. And so I was buying these properties for the same price as they bought them for in 85, 86, 87. Well, it wasn't until 2001 where I would call on for sales and I saw 90,000. These were all 65, and then 120. And then I started being more engaged with seminars and books and courses, and everybody taught what they still teach. That's debt equity, right? Pull this money out. I have these houses I owe 50 on and now worth 125 or 150. So I pulled all the equity out of them and then used it to parlay into more properties, ended up with 84 of a house of cards. So what I know now, what I would have done different is just ignored the boom, kept those 20 properties, which would have been free and clear by the end of the boom, $20,000, $25,000 a month positive cash flow, and just let everyone else do their thing. But instead, I did what everyone did. It was the gold rush, right? We were all killing it. And knowing what I know now, what would I have done different is I would have ignored the boom and just kept doing what I was doing all along before then. Let's do this. I'm going to move on to the final segment, what I call the final four. What do you think holds most passive investors back from hitting their personal next level, whatever that happens to be? So, I know this is a cliche answer, but I really believe it. One of the things I think is just fear. It always seems like I hear this from even private lenders. They say, well, if it was that easy, everybody would do it. If it's too good to be true. And the reality is it's not easy, obviously, especially passive investors. It does take research and it does take vetting your deals. And there is work involved, even for passive. Once you do the work, you can be passive forever, but you still have to vet your deals. You still have to do your research. But I think what stops most people is strictly fear of taking that first step. And I get it. I mean, because especially if you're older and passive and you just want to make a return on your money, you worked your whole life for it. So you're not risking it. Correct. And so fear, I think, is the biggest thing that stops people. What are you passionate about outside of real estate? You know, what's crazy is I love real estate and I love business. And, so I always talk about, people say, you're never always talking about real estate. You'll find that your whole circle ends up being people that are into the same thing. Otherwise, they're bored to listen to me speak. But the other thing that I really enjoy is I love traveling. I'm a big traveler. We travel. We do 30-day trips constantly, me and my family. Yeah. And I like doing 30-day trips. I like not just going on vacation, but I like living in another country. And, in a month, there's enough time to do that where you wake up and don't have any plans and you get to meet people and see what's there to do. So I really do enjoy that. When I go on regular vacations where it's like a week, it's almost exhausting because you have to wake up every day and you have a plan. You have to see this, this, and this. Correct. So I like to try and do a month where that's it. There is no agenda and you figure it out as you go.
Your favorite book?
Well, I won't say my books because I'll tell you what I think is one of my favorite books is one that I've read multiple times is The 4-Hour Workweek. Sure. I really enjoyed that one. And, I remember when it first came out because it was it was just a different way of thinking. And it was again on the same lines that my brain's on now is that you don't need as much as you think you need. And I remember where and again, I have a lot more now than when I came to this conclusion. It's amazing. Once I lowered how much I wanted monthly, I 10x'd it, but you don't need as much as you think you need. And I think the 4-Hour Workweek was a great insight into how much time and energy we spend chasing bigger dollars, that all that means is you're going to die with more money, when I'm all about let's live the best life. Let's not worry about dying with more money. Yeah.
Your favorite way to make an impact in the community?
That's interesting because I've gotten into where I fully enjoy what we're doing right now. I love training new people and I love helping set other people free. It's something I really, really enjoyed. I didn't used to enjoy it as much when I was still working on getting myself free. But ever since then, that's something that I really, especially younger people, if you can have an impact on younger people, college age people that are graduate and are lost, like they have this huge degree and have these huge bills and have no clue what the heck they're going to do with their future. I really enjoy when I get to sit, because I'll meet with people all the time. I'll get messages and I'll go have lunch with them. And just because I enjoy getting a mind straight. It's so much data out there in the world that it's so confusing for people, including myself when I was younger. And I really like opening up someone's eyes to there's an easier way. It doesn't have to be the way the world is set you up to, you have to exist. There is another way that you can live. And I do enjoy that a lot.
Yeah, this is a great conversation. I've never heard of the slow flip. So I love the branding surrounding that and your ability to match the short-term and the long-term financing and ultimately live off the cash flow, become debt-free, and live a high-quality, more passive lifestyle than a whole bunch of people do in this industry. For people, they want to find you, they want to follow you, they want to connect with you. Where can they go? What should they do?
Well, I think I told you, I have a new book that I wrote called The Art of the Slow Flip. And we're going to give everybody a free copy of it. If they want, they can just go to slowflip.com, slowflip.com, and they can get a free copy of the book. Just pay the shipping and handling. I think it's $6 or something. And I already have them in stock, so we'll ship them right out. That's the easiest way. Other than that, I'm on all socials under my name, Scott Jelinek, and it's easy enough to find just by typing me in.
That's perfect. We'll make sure that the link to the book is in the show notes below for everybody. Scott, I appreciate your time here. Thanks so much.
Thank you very much. I had a great time, and thank you for having me on.
You bet.
To our listeners, pat yourself on the back. You guys have made it to the end of the show, and most people never finish what they start. If you receive value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.